Hello, friends. Welcome to the episode 2 of the magical stock market course, Become an Expert from a Beginner. In my last session, I mentioned before you jump into the stock market on which of the segments we will talk first. I showed an outline. If you have missed that video, please check on the description below. You will get the link. Today, we'll be discussing why stock market. Before you come to the market, you need to understand very carefully, specifically for the beginners. Let's discuss on the first element of this segment, to beat inflation. What is inflation? In very simple, when the price of goods increase with time. Let's understand this with an example. Let's take that the inflation is 7%. So in 2023, you need to pay 100 rupees to buy a kilo of rice. In 2024, you have to pay 107 rupees to buy a kilo of the same rice. In 2025, 114 rupees. In 2026, 122 rupees. And so on. In 2030, you will see that you are paying 160 rupees to buy a kilo of the same rice. So with time, you can see that the price of the rice has increased, and so for all other goods the price will increase, and that is known as the inflation. However, we also need to understand that are you able to increase your money at that pace? So let's say that in 2023 you are keeping the same 100 rupees amount in bank in fixed deposit, and let's assume that the rate of fixed deposit is 6%. So in 2024 your money will become 106, in 2025 112, and so on. In 2030 you will see that your 100 rupees which you invested in 2023 has become 150 rupees now. However, if you compare that with this 150 rupees, are you able to buy a kilo of the same rice which you used to buy in 2023? You will see no, because now to buy a kilo of the same rice you need to pay 160 rupees, but your money has only become 150, right, in 2030. So what does that mean? That your purchase power has reduced. So that means that compared to 2023, in 2030 you have become poorer. Now here comes our next element, like to grow money and to become rich, why stock market is very important. So let's see on the screen that if you see the average return of the Nifty 50 over last 30 years, you will see that it's 12%. Now what is Nifty 50? Nifty 50 is nothing but the top 50 stocks which actually represents our Sensex or our Nifty. Okay. So that is known as the Nifty 50. So let's say you have done nothing. You haven't invested on anything. You have just invested in Nifty 50. And the average return is 12%. So let's say that the average return is 11%. Let's reduce 1%. Okay. So you will see that in 2023, if you have invested 100 rupees in stock market, in 2024, it will become 111. In 2025, 123, and so on. In 2030, it will become 207 rupees. Now, if you compare it with the fixed deposit, you will see that in fixed deposit in 2030, you are getting 150 rupees, but investing in stock market, you got 207 rupees. Now, with this 207 rupees, will you be able to buy a kilo of the same rice which you used to buy in 2023? So you will see that yes, in 2030, to buy a kilo of the same rice, you just need 160 rupees. But now you have 207 rupees. So that means you have grown your money by almost 47 rupees, right? So that's your extra income. So that's the wealth you have created with time. So that is very important to understand, that whether you are growing your money or you are actually losing it. Okay, so that is why stock market is very essential in our life, and everyone needs to understand what's happening with the economy and why day by day whoever we are investing in FD or we are keeping our money in bank, we are getting poorer day by day. Okay, so that is why we should invest in stock market. I hope you have enjoyed the video. Please do subscribe and share it with your friends. That will really keep me motivated. In next episode, I will discuss about why Indian stock market, why are we so privileged. Also, as I promised, at the end of this course, you will truly become a stock market expert, and that is my aim. See you in the next video.